Hey everybody, welcome back. Sive here with the forexpeacearmy.com. Hope you're having a good time with your relatives. More to come actually in the beginning of in the end of the next week, where we'll get the New Year's Day, approximately the same holiday, so the same length will be. So probably next week will be mostly as boring as this one. Although this one, I wouldn't say that was too boring, is because we still got the gross domestic product report, some statements, data from the Japan, and so on. So it's definitely something to talk about in today's weekly report. Speaking shortly, the data that we've got doesn't break the existed narrative that we have on the euro currency. It just confirms the tendency, and it tells that we do not have currently big reasons to suggest that euro should break this tendency. So reaching over the 120, 122, as the Deutsche Bank suggests, even 125, is quite possible in the midterm perspective. So numbers that we see, if you will dig it a bit deeper, trying to find the background, the real meaning of the numbers that we've got, you'll understand what's really going on. So that's what we discussed today in a report. Since we do not have a lot of statistics, a lot of events, report is relatively small, so not as big as usual. We hope that you will get really fun to read it. So now concerning the trading plan for next week. Last week we discussed the weekly grabber, if you remember. But this grabber that we have, I just remind you what we have on the weekly chart, this one, it's a bit contradictory to the overall background that we have. In fact, this grabber suggests some sharp demand for United States dollar. Only this might explain the possible drop down below the lows, which is actually really big distance here. But problem is not only with the fundamentals. Fundamentals doesn't suggest this action. The only problem that I could see and suggest is probably some liquidity issues. But with the recent quantitative easing Fed Reserve dictations, let's call it in this way, this problem is gradually resolving. So repo facility is reestablishing. We see that banking reserves are rising. So from that standpoint of view, SOFR rate now stands well in a normal range. Only something unexpected should happen to make this grabber working and lead to drop. From the technical point of view, it also is not quite reasonable in current situation because it breaks the overall picture. We have, and actually we already talked about this a few times, that we have a kind of the bullish dynamic pressure. It's because market is moving high lows, high highs when the trends then downside. And appearing of the grabber, it actually doesn't correspond to this thing. It means that we have to be really careful to the performance of the market on the lower time frames. As I suggest, in the nearest few sessions, we should get the clarity, particularly speaking on intraday charts. If you will take a look at the daily chart, yes, we see here some bearish nodes. First is a kind of the wash and rinse above the XOP, so here market just briefly spiked the top and turned downside action, but at the same time we do not see kind of the capitulation. We do not see big plunge like there on the top when the market just collapsed, showing an inability of the break in the top. Yes, that might be the byproduct of the thin market. It's also possible. That's why currently we need to keep an eye on what will happen around it. If even we will not get the grabber action down to the 114.50, but even 30% retracement, it might be important. In general, this performance, I wouldn't call it as a perfect thrust, because here we have the two interruptions, but both of them hasn't reached the 30% support area. And from that standpoint of view, I would suggest that still we here have some upside momentum. From that standpoint of view, probably we could try to use it for Joe Napoli type of action. Either double repo sell, probably it's only pattern that we have now, because with this retracement, market hasn't reached the 30%, and we haven't got the bread and butter. So probably here we could speak about either double repo sell or double repo failure, which is also might be important, because you know that the failure pattern is not just a canceling of the direct pattern. This is separate opposite pattern that also suggests the taking position. So that might be important, and that's what we intend to keep an eye on. On the lower time frames, on the 4 time frame chart, for now, this picture doesn't break the bearish suggestion yet, because we have divergence. In the recent few sessions, market moved slightly lower, and nothing actually destroyed this possible pattern, right? The same story is on hourly chart, with the hand shoulders that we talked about now stands in place and ready to go. And here is the real moment is coming. So what we intend to keep an eye on. In fact, we need to monitoring the 11750 area, because if with this downside action market will stuck somewhere inside 1750, 1760, flirting here, completing just minimum target with the OP, that might be treated as a bullish sign, because market might be turned to forming of this type of action. It might be turning into triangle. And if it will happen, this will be line a bit lower. This market will complete the OP target. This will be definitely bullish. So the consolidation near the top, where actually bearish performance should start, and usually bearish performance starts fast, this consolidation will not stand in a row either with a double repo pattern or with a double top pattern. This side of consolidation will mean that market is preparing for a breakout, and that will tell us actually everything. So if we will see it, it means market is preparing for a breakout and we start thinking about taking a long position. If instead we will see that market is relatively fast, will break it down, start acceleration to the XOP 1730, 1740, that will increase chances for a deeper retracement. So as deep market will keep falling, as more chances will appear for a possible downside action. So that's the story that we have here. Our first stage is to keep an eye on what will happen on Monday and Tuesday around 1750 area. Hopefully we will be able to recognize the signs and actually make the decision. That's into what we have on euro currency, so let's keep watching and see what will happen.